Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Invesco QQQ Trust. It's basically the ETF that tracks the tech sector, and that's ticker symbol QQQ. As you can see, I've left my lines on the chart where this horizontal line was my intermediate term target that I had left up there, and I said I would leave it there until it was hit, and then I'd remove it and continue on with the forecast. And as you can see, we closed almost to the penny on that target level. And so today, as I zoom in there, you can see that we had a bearish engulfing candle, very pronounced bearish engulfing candle, by the way, on higher volume. Now, when you see that bearish engulfing candle like that right on a key support level, you can assume that the higher volume is telling us that the sellers are motivated. So I do believe that next week we're going to see lower prices. And as I've told our members over and over again, when you look at the candle supported by volume, that basically trumps the oscillators. So even though the oscillators are showing oversold conditions, you can see as I zoom in on the stochastics, it's hinging lower, and so is the CCI. So now that we've hit our targets, I will erase these lines and draw my forecast for next week. This diagonal line that I'm drawing, I call a zip line. I'm not getting crazy with a big downside target, because if you look above the market, we still have two open gaps here, which will act as price magnets. So I do believe we're going to see lower prices and then possibly see a bounce. We'll have to keep an eye on the volume. If we get a drop in volume on the way down, that will tell us that the sellers are becoming less motivated. And so this market right here is still in a very well-defined trading range. I'm going to keep the high resistance up here around 370, and we could bounce around in here for a little while. So we'll have to keep an eye on the charts. Now, IWM, so far we're halfway through my forecast and what I projected, and it's hard to see, but down behind these lines, I drew this diagonal line up, and I said early in the week we'll most likely rally up and then start to pull back. So that's exactly what's happening right here. We came very close to filling that gap just by pennies, but it looks as though the market wants to go back down. You can see there's hardly any shadow on that red candle right there. That tells us, again, we closed right on the lows. So I'm going to keep that downside target in place, not changing that. Remember, all the way to the left here, you can see that we have an open gap. And once that gap fills, I'll try to draw a straight line right there. Once that gap fills, we could see a little bit of a bounce higher, because 80% of the time gaps fill, and then after they fill, we generally see an 80% reversal in that price action. So that is IWM, keeping that in place. Now, taking a look at SPY, this is the S&P 500 ETF, keeping that target in place as well, right there. As I zoom in here, I want to show you something that's very interesting. Yesterday, which was Wednesday the 13th, we closed with a bullish engulfing candle. And at that point, we had a lot of bullish engulfing candles, bullish haramis, a lot of bullish signals on individual stocks as we were forecasting Wednesday night. And then, bam, we get hit with this bearish engulfing candle that basically negates that bullish engulfing candle. And I was on a conference call with some of our members, and I was talking about the summation principle, where you take the 4 days of action and you sum up the price action. So in other words, you go from the opening price up here on that red candle, you take the closing price here on this red candle over the 4-day period, and you draw your highs and lows, and you still have a red candle on SPY on higher volume. So I do believe we're going to hit that target next week. Keep in mind that as we get closer to the end of April, and I'm going to talk about this when we look at the monthly charts, especially on the diamonds, when we get to the end of April, if we have a red candle, you're going to see the people who sell in May and go away. They might decide to sell a little bit earlier at the end of April if it looks like it's going to be a negative month, and I think it will. So be prepared for that. Next week is going to be a big week for us, especially when we have a week that follows the monthly options expiration. That tends to be the most volatile week of the month, and so that's going to be a very interesting week for sure. So again, I'm keeping my downside target on SPY right around 430.23. Now with that said, let's hop right to the VIX. You can see that this is, for the most part, it's inversely related to the S&P. Today we close with a very well-pronounced hammer pattern that's bullish, right on that 20-period moving average. Now remember what I said about the candle pattern. That trumps the oscillators. So although the oscillators are going down, that's a bullish candle, and I am keeping this upside price target right there, right around 30.17. Now remember, I'm keeping a longer term price target up here around 41.88. I do believe we're going to hit that when things start to heat up in this bear market, but short-term target right there is going to be $30.17. I'm not changing anything. I'm just keeping that horizontal line as my target right there in place. Now let's take a look at the diamonds. This is the ETF for the Dow Jones Industrial Average. Pretty much the same story as what we're seeing in the SPY. I'm not going to be changing that target. That's right there at 337.57. Notice the candle pattern. Again, we're very close to a buy signal on the stochastics, and you normally don't see it set up this way. If you were just looking at the oscillators down here, you'd think it was a buy and the momentum is heading higher. But again, look at this candle. We opened right at the top of the red candle. We tried very hard to keep it over that 20-period moving average. And what did they do? They closed it right on the low. Look at this intraday chart. It's pretty amazing. Closed right on the low right there. So in the first minute or so of the day, they pushed it up. They tried to keep it up. And then boom, they just kept pushing it down, again closing it right on the low for the day. So it's telling us that the sellers are very motivated. Now remember what I said about the monthly chart right here. Take a look at what's happening. We have a red candle right there on April. And I was on a conference call actually Monday, Tuesday, and Wednesday talking to our members and explaining to them that over the past 16 years, 15 of those 16 years resulted in a positive April, a green candle in April, with April being the best month of the year. This could very well be the second time in 17 years that we wind up with a red candle in April. And that's why I tell you that there could be a jump in the May sellers who, again, like I said, they sell in May and go away. They could jump the gun on that and start to sell towards the end of April, which in turn would push this down. Take a look at the Qs. I'm just going to hop back to the monthly chart on the Qs. It's very, very interesting here. You have to see that today, as the candle closed, remember, we still have 2 more weeks in this month, but we are now trading below that 20-month moving average with a bearish engulfing candle to boot. You know, back in the COVID crash, you had this big 3-month sell-off, but even then we did not close below the 20-month moving average. If we do that right now, this month, watch out below. I'm telling you, I'm not this perpetual, permanent bear. I'm just reading the charts using Dow theory, and this chart right here is telling us that the markets are being threatened to the downside. And that could very well lead to a recession, because if you follow Dow theory, that tells us that the Dow leads the economy by about 8 to 9 months. And so that brings us into the end of the summer, beginning of fall, where recession will be the topic of conversation in a lot of these financial networks. Now, last week we had one of our followers, Natasha, ask me to analyze Ethereum. And I'm going to do that actually. I've been skipping every now and then because there's been a lot of pressure in the crypto market. But if you look at ETHE right here, you can see on the daily chart right there, we've had 2 gaps in a row. See, this is a gap down. We had another gap down. But notice this candle, again, today, that is a bearish harami. That is bearish, no doubt. That's as bearish as a bearish engulfing. And so there could be some more downside to Ethereum next week. Probably something like this. We'll see a little bit of a sell-off. But I'm going to go out a couple of weeks now and forecast that I think we could see a bounce in Ethereum. Why do I say that? Well, you have to really look at the weekly chart to appreciate this. Ethereum doesn't usually gap up or down. And it's a rare occurrence, but this week we gapped down. And that's why I ended my forecast line up there around 23.97, just under 24, because this weekly chart right there, the gap fill is right around that area, and gaps and the gap rules that I talk about all the time apply to the crypto market, the Bitcoin market, just like any other market, including the equity markets. So that is going to be an interesting week next week for Ethereum. Again, a little bit of a sell-off. I'll put a downside target of 21.11. And then over the next 2 weeks, I think we're going to hit just under 24. So again, that's a shout out to Natasha. Thank you so much for following. Please like, share, and subscribe to this channel. It helps the algorithms. It helps get the word out to those who are learning more about technical analysis. And I can't tell you how much I appreciate each and every one of you following. It really helps quite a bit in promoting technical analysis. So each and every one of you more or less acting as ambassadors for the charts. So with that, have a very happy Easter weekend, and we'll talk to you soon. So long.